back to my channel. So today's video will be a walkthrough on how to automate trades in Thinkorswim. So y'all see I have Google pulled up here on the chart. The first thing I'm going to do is show y'all how to pull up the exponential moving average because we're going to use that as the baseline for the indicator that will automate. So let's go ahead and dive right into it. I'm going to click on this beaker icon up here. I'm going to go ahead and type in EXP to pull up two exponential moving averages. The first one, I'm going to go ahead and click the gear icon on the right. I like to leave it set for the standard for 9, but I like to change the color to green, hit OK, and then this one I'm going to go ahead and change to the 21-day EMA there, leave the color set as blue, that's just my preference, hit OK, apply, and then OK. Okay, so from here we see that the EMAs are pulled up, and remember, if you're not aware, the green is going to be the 9-day, the blue is going to be the 21. And what this means is it's a crossover that you'll see happening, and it's an indicator for a lot of traders on whether the stock will be in an uptrend or a downtrend. So we see right here when we see the green crossing over this blue, the 9 over the 21, and this is going to take place, it looks like March 15th of this year, we saw that the stock went into an uptrend. And it continued in that uptrend all the way up until it looks like July 22nd, and we can now see that the 21 crossed above the 9. So we can see that it then fell into a downtrend. Now this is significant for a lot of traders because they use this as a signal to either enter or exit a trade. Now again, I wouldn't recommend using this as your singular means of confirmation, but it is something you can combine with other clues and other signals. So I'm going to show you how to monitor and also how to actually automate the trade based upon just knowing these two clues for entering and exiting. Again, make sure you always combine it with other forms of confirmation. Okay, so now that we have that understanding, I'm going to go ahead and click on the trade tab, and then of course the weekly option chain is going to pull up. For example purposes, I'm just going to go ahead and select January 10th for the expiration for next year. And of course, we're going to make sure we always consider the current share price. We know that Google is going for $170.49, or Alphabet if you want to consider it that. It's going for $170.49 for the share price. So we're looking at the strike prices here. So we're going to say $175 for the call, and we're going to go ahead and click on it. Once you do, you'll see the order entry tools pulled up. Now from here, this is where we're going to go ahead and automate the trade. So we see the spread is set for single. We see the side is buy, and then you can change your quantity for the number of contracts you would want. And then of course we look at Google, and then it's telling you the weekly expiration. You're looking at a 175 strike, and then the call option. Then it also is going to show you the price and then the limit order. You can have it set for day or good to canceled. But I'm going to go all the way over to the right side where you see this gear icon right here. Go ahead and click on it. Once you do, you're going to see order rules pop up. Now within these order rules, you're going to see it set for side to have it as a buy or a sell. We're going to start off with the buy. You can also again change the quantity for the number of contracts to be more or less depending on what you want. And then we're also going to look at the price rules in just a second. But I'm going to go ahead and focus on the conditions tab for right now. Now under symbol, you're going to go ahead and click on this box underneath, and once you do, the actual ticker symbol will pop right up for whatever you're looking at, in this case Google. Then you're going to click on method. Once you do, it's going to default to mark, but we're going to go all the way down to study, and you'll see it has it defaulted for the simple moving average, Bollinger Bands, and then the volume average. We're not going to use either of those three for this example, so I'm going to go ahead and click on edit. And now you'll see the study order condition tab pop up. And from here, you're going to go ahead and take a look at the condition wizard or the Think script editor. This is going to be a little more advanced as far as coding if you wanted to use this. So we're just going to stick to the condition wizard for now. Now we see the simple moving average is defaulted. I'm going to go ahead and hit delete so we don't have that. Now we're going to click on add a condition. Once we do this, you're going to go ahead and select the drop down, go to study, and this is where you're going to type in EXP once again to get the exponential moving average. Now you see it's defaulted to have the price at the close, the length for 9-day, and then of course you can show breakout signals if you'd like. This is completely fine to do. This middle box is how you're going to edit the condition. I'm going to have it set for crosses above, so we want the 9-day to cross above the 21. So you're going to select a condition once again, go to study, and then type in that EXP once again, there. And we're going to go ahead and scroll down, change the length of time in this particular case to 21 because we're looking for the 9 to cross over the 21. Go ahead and hit save. And then once you do, you'll now see it moves up into this box right here. It'll show you the moving average exponential crossing above the moving average for the length of time that you selected. you're just going to go ahead and add another condition if you feel it necessary. And this can be another indicator, whatever you choose. In this case, we're going to be satisfied with that. So I'm going to hit cancel. And then you can see next to condition setup, there's this letter D, and this is going to tell us that it's set for the daily chart. If you click on this, you can have it set for a 1-minute chart, 2-minute, or any other time frame. Now, I would recommend keeping it on a higher time frame because we do know that indicators such as like the exponential moving averages, simple moving averages, RSI like MACD, all that stuff is more reliable on higher time frames. So I would recommend keeping it on that larger time frame for this particular part. Simply because it's going to be validating the trade at a higher rate of reliability. So I wouldn't deviate from changing this to daily. I would leave it set for that. And that's just a little tip to have in case you just wanted to know like what is the good time frame for it. I would recommend leaving it at a higher one. Then you're going to go ahead and click on OK. Now you'll see down here under conditions, we have it set for the study, and then it'll be a true trigger. Then they give you a detailed description of what you're looking to do, which is submit the order for Google at the weekly on January 10th. Then it's going to be at 3.7 or better. Now we're going to edit this in just a second. But you can also see it saying wait for the following conditions to be satisfied. It's looking at the exponential moving average crossing above the 21, and this is going to be set for true. We're going to scroll right back up. So going back up to the top, we're going to go ahead and select this as far as price rules. We see it set for limit. Now I will say if you have it set for market, you're guaranteed to have your order fulfilled. But if you have it set for limit, it is a possibility that you may not have this particular order filled within the market simply because it's set for a limit order. Now, the preference for some people just depends on what they're looking for. If you're looking for fast executed trades, then market is going to be obviously something you set for it. But if you're looking for maybe the best price for the option contract, you may choose to have it set for limit. But the trick to this is this. You should take this limit link to, take it off manual, and scroll all the way down to mark. This is kind of like a way around it. And the reason that this is kind of a good way to go about it is because it literally puts your price at where the order would get fulfilled, right in the middle between the bid and the ask. So let's say, for example, the ask price is going for 1.15 and then the bid price is going for 1.13. Right in the middle would be a 1.14. So that's where you'll have that mark met for this particular trigger. And then, of course, I would always change it. Instead of having it set for day, change it to GTC, which is good till canceled. So you'll see that set here. And there's no need to change instructions because it's completely fine. Go ahead and leave it set for that submit. And then you'll be able to kind of look and see at the method they have. And you can see again, it's set for that true trigger. So once you scroll down, again, you'll see the confirmations that you already set. All you would need to do from here is just click on save. Okay, so that's the first half of how you would do it. So that's going to show us that we're going to go ahead and buy this particular contract. And we've already set it for the parameters. Now we would need to sell it in case the opposite becomes true. So to do that, just simply right click, go on create opposite order right here, and then you'll see it pops up an option to sell this particular contract, but it's defaulted to the same things. So we're going to go ahead and click over here at this gear icon to edit, and now we're going to edit for the exact parameters, but in the opposite direction. So in order to do that, we're going to go ahead and click on study here, go down, and then just simply click on edit. And once you do, you're going to click on edit once again. And now this is where you just simply click on crosses below because now we're looking at the 9 crossing below the 21. So you're going to click on save and then of course wait a second and it'll pop up and then you're going to click on OK once again. And now you'll see it has 3 different descriptions set for what we're looking to do. So again, you can leave this set for the limit, leave it set for the limit offset to be that plus 0.00 because it'll find that median, and then leave the link to at mark. GTC stays the same as well. Okay, so go ahead and click on save. And then once you've clicked on save, you would simply just click on confirm and send, and this order will be sent at the particular time that the stock actually reaches that trigger that you've set. And from here, you'll be able to monitor it under the monitor tab. You can look at activity and positions, and you'll see it pop up showing that the order is kind of like pending in a sense. Essentially, that's all you would need to do for this to be executed. Now, again, do I recommend this for new traders? No, but it is good information to have if you're more of an experienced trader and you're confident in being able to kind of rely on 1 or 2 indicators. Again, you can add multiple different conditions to these orders so that it's automated for you. And this is helpful, for example, if you know like you're gonna have to step away from your computer or if you're stepping away from like your phone or whatever. It's also really good if you're swing trading because you can have everything set to be automated based upon multiple conditions. So again, I only showed you one in this video because I didn't want to make it too long. but you can definitely have more than one condition set. So yeah, I really hope this video was helpful for everyone, and it's just information to have in case you need it. If you found value in the video, feel free to leave a comment down below. And as always, I thank y'all so much for watching, and I'll see y'all in my next one.